important, and it's very important for us to understand, because again, in this industry, these guidelines and the things that mortgage lenders require, it can be confusing. And for some people, it caused them a stressful home buying process, or and we just trying to make it easy for you. So I'm gonna let Randy jump on in.
Absolutely. So listen, I'm super excited, guys. I could barely contain myself in the seat because this is a great topic, like Veronica mentioned. Now, before we actually dive into these 10 things, right, I want to set the stage, create the foundation first, right? So let's look at why the interest rates are so low, right? Because the reason why we have so many people doing refinance loans and so many individuals are purchasing homes is because of the low interest rate. It's being driven by that, right? And so oftentimes you look back maybe 5 years ago, 6 years ago, a couple of years back, you may have 30-day closings, right? Then all of a sudden you notice during COVID-19, it kind of went to almost 45-day closings, right? But here's the reason why. Because when you look at history, history always tells us that in historic times, whenever there was some type of war going on, some type of pandemic going on, something
Randy, you're muted.
Thank you. Thank you. Can you hear me now?
Yes, right. I can hear you now.
Awesome. Awesome. And so if the interest rates are a little higher, right, then the cost of the borrowing of the funds from the financial institution, they're going to borrow that fund at a higher rate and pass it along to the consumer. But here's what happened during the pandemic. There was a big crisis going on and still going on. So the Federal Reserve said, listen, we're going to drop the rate to zero, like literally it went to zero. And so banks and financial institutions went to the Fed. They started, the Fed was buying government bonds and treasuries by the billions, right? And so now the financial institution, the banks, go to the Fed, get this 0% interest rate, and they charge a lower interest rate to the consumer. So all of a sudden, the interest rates are super, super low. And now people are thinking and say, wait a minute, hold on. I may be able to refinance my house to pull out some cash to pay off some debt. I may be able to refinance to start to do some investment when I pull out some cash, or I just wanted just to refinance and just lower my mortgage rate in general. To give you an example, we're working with a young man, probably like 27, 28 years old. I mean, literally got his stuff together, right? Proud of him. And he has a duplex right now. He's been living on one side. He's been renting the other side out. He purchased the property 2 years ago with an FHA loan, right? Credit score, great credit score, real proud of the young man. And so he contacted us and said, listen, I'm thinking about refinancing. What would that look like? So after we obtained his mortgage statement, he was paying $1,200 a month for that property. Now, what we've done is we're doing a cash out refinance. It's $25,000 estimate that he's going to pull out of that home. And his mortgage note is going to go from $1,200 to about $825, right? So it's a big difference between those two mortgage payments. Plus, he's getting $25,000 out of that property because he wants to start to invest in other properties. So people around the world or around the country saying, wow, I can do this. I can pay off some debt. And so now what happens, more and more people start to fill up the pipeline of the mortgage industry. In addition to that, buyers say, listen, this is the perfect time to buy, right? Before 2-3 years ago, when interest rate was 4.25%, they may be only able to qualify for maybe a $225,000 home loan. But now with interest rates so cheap and so low, they might be able to qualify for a $285,000 or $325,000 mortgage now. So they have more buying power, right? And of course, that keeps their mortgage payment super low. So now when people are in a position saying, listen, the interest rate is low, I'm going to refinance, it's time to purchase, and all of a sudden we find ourselves in a seller's market, right? Where you have less inventory, but a ton of buyers that's looking to buy homes because they want to take advantage of the interest rate. So when we look at the topic today is how can we be efficient and to be able to put ourselves in a position to close on time, then we have to kind of know this background, have the foundation. Here's why I told that story. Because right now in the mortgage industry, and I'm particularly talking about the people in operations, I'm talking about funders, I'm talking about closers, I'm talking about processors, and I'm talking about underwriters, right?
So these are all people that the normal public and, you know, us people or people on the outside of the industry don't even know about. Because nobody knows, well, I'm not gonna say nobody knows, but majority of the people doesn't know, like once their loan is cleared to close, they don't know what's going on behind the scene after that. So they call in the title company, oh, where the documents at? Or they tell the title company telling them, we don't have the lender documents yet. Well, because it's still being processed through the pipeline.
Absolutely. And so what happened is these professions, right? And these professions pay real good money, right? I know some underwriters making between $85,000 and $120,000, depending on how good they are. But my point of saying is that you don't have people coming out of college saying, I want to be an underwriter, right? You don't have people coming out of high school and say, listen, I'm going to go and take some courses to be a processor or to be a closer or to be a funder, right? So this is, you know, livable wage jobs, right? 6-figure income in some of them. So now what happened is you have a pool of individuals that have been in the industry for a long time, and they're just going from company to company to company. So companies are recruiting the same group of people all around the industry, right? Because there's no new people coming into the industry. And so what happens is that slows down the process of the loan just because of the fact of manpower, right? So oftentimes it doesn't really matter about, hey, I'm going to lender A, I'm going to lender B. Oh, lender A was kind of long. Lender B was kind of long too. And lender C was kind of long because it's an industry challenge. It's an industry problem, right? Now, what separates that different mortgage loan originator from another one is the character, right? So Veronica and I, we real big on communication, having clear communication. We're real big on making sure we're setting the proper expectations and giving an exact blueprint to follow so that individual is not guessing, they know exactly what needs to happen in that process. But outside of that, from an industry standpoint, it's been challenging, guys, because of the low interest rate. There's a ton of refinances in the pipeline. There's a ton of purchases in the pipeline, and we just don't have no new people coming to the industry, right? Now, that leads us to the first step or the first thing. Of course, the topic, just to reiterate, the topic today is 10 things home buyers and real estate agents must do to ensure an efficient and timely closing. So here's number one, guys.
So the first thing is to get pre-approved. My mom always told me, if you don't have no money, don't window shop. I don't window shop. If I go to the mall, I'm buying something, right? He knows.
Say that again.
If I go to the mall, I'm buying something.
You are my witnesses.
It's recorded.
So absolutely. So, and it's a big difference between pre-qualification and pre-approval, right? Very, very simple and quickly. Pre-qualification is you give some verbal information to that mortgage loan originator, and they pre-qualify based on what you told them. You know, you might told them you had $20,000 in the bank, $10,000 in the bank, etc. That's a pre-qual. But pre-approval is when you actually give documents to your lender to provide proof that, hey, this is exactly what I have in my bank account. Here is my pay stubs, or here's my profit and loss statements.
And here's my W-2s. This is exactly what I make.
Exactly.
So we're verifying the verbal information that was given on the application.
Exactly. So once that is verified, now you can actually get a pre-approval letter. And now you actually can start shopping for your house with confidence, right? So that's the first step. What's the next one?
So the second thing is you want to have proper expectations.
Right. I love that. Just setting a proper expectation. And, one of the things is that, when we are talking to our buyers, we let our buyers know, listen, are we on the same page? You want this home, right? Right. You're committed to it, right? Right. Good. So when we request documents, right, I need you to commit to having those documents over within 24 hours, right? 24 hours, that's the max, right? Now, we get some people that might give documents in 2-3 hours, right? I have a gentleman I'm working with right now. I might text him some, or email some, 2 hours, boom, it's there. He would text me back, done. I'm like, dang, that's what I'm talking about.
Right? And right now, that's so important because, again, we're in a seller's market and it's also a buyer's market. So we are in a very unique position right now. So what I mean by that is it's very important to be swift with getting those documents so that you can get your pre-approval letter, because as soon as the property hit the market, most likely it's gone.
Absolutely. And so now, you want to be in a position to know that, hey, I need to respond to all texts that coming from your lender, emails swiftly that's coming from your lender. And then also you want to make sure you give those documents within 24 hours, right? Because I also had clients that, took a while to get documents. For example, I was working with a young lady. She had about 25 accounts, like literally 25 open credit lines. And she couldn't get pre-approved because of DTI, her debt to income ratio was too high. But by us having that financial consultation with her, that we was able to discover, okay, well, if she pay off 17 of these items, and there was all small items like, $80 on this card, $50 on this card, but the monthly payments was high. The monthly payment was $50 for this card, $60 for that card. So the debt to income ratio was high. So we identified, so, okay, here goes 17 of these credit lines that you have that needs to be paid off, but we need the payoff statements for each one of those 17 items. So if you can imagine for a moment, it took a little while for her to go and obtain 17 of these payoffs, right? She did it, but it took a while. And that's called setting proper expectations, right?
Correct.
And so having said that, that is, having a proper expectation, just knowing that we're here as a team, right? We want you to win, right? We're here to make sure that you get a good experience. So what's number 3, Veronica?
So number 3 is agents. You want to keep the FHA inspection guidelines in mind to ensure that the property meets them.
Oh, yes.
And I have a few things.
Awesome. Well, while you pick that up, listen, I can't express how important that is, right? Sometimes things just not top of mind. We busy, life get in the way. We have the children, we have the spouse, we have the bills, we have life, we have COVID-19 right now. We have all kind of things going on, but the idea is just to keep it top of mind. So as an agent, if you're selling the property or if you even on a buyer side, you just want to know, okay, if this person being qualified as an FHA loan with an FHA loan, then there's going to be some FHA guidelines that must meet that property. Because there's 2 approvals, guys, I want you guys to really get from this podcast today. It's 2 approvals. The first approval is the actual borrower themselves, But the second approval is the home. The house has to be approved for the lender to move forward. And the only way the lender is going to know details of that property, they actually have to obtain a inspection by an appraisal, right? Appraiser, right? And so that appraisal report is going to give the details to the lender. So for example, Veronica is going to read out a couple of FHA guidelines just to keep top of mind.
And we choose FHA because that's pretty much a common loan product for first-time home buyers and things like that. But FHA is very big on the safety of the home, the security, and the soundness. So a few things that an agent should look out for when they're actually showing a buyer a home on a property, just to make sure that the property can go with an FHA loan. Like, for example, you have missing handrails. Missing handrails, that's a safety issue, correct? You have peeling paint or bars on a bedroom window without a quick release mechanism. That's very big. So if a fire breaks out, if you're in your bedroom, how would you get out if the fire is in the front of the house and the only access is through your window, but you have the security bars on there? It has to have a quick release mechanism. One other thing, they also look for cracked window glass. What else? Let's see, minor plumbing leaks, things like that. And most of these things, once you get to the inspection report, so if a seller decides, hey, I do want to accept that buyer's offer, well, they are basically agreeing to comply with the guidelines. So once you do your inspection, then you get your inspection report and you go over those things that you want them to fix. And as an agent, again, just keep these things in mind. You write them on the inspection response, send it to the listing agent, and the seller reviews it to see what they want to do or not do. And then at that point, then you have the option to either, if they say, okay, we're going to fix it, then hey, you can move on. Or if they don't want to fix it, you have the option to walk away. But these are the things that you need to keep in mind. And again, if you can't remember all of these things or don't have access to these things, you have access to us. So we're here to help you.
Right, exactly.
Yeah.
And why is that important from a seller agent and a buyer agent? Because, you want to set the proper expectation, like we talked about in step 2, right? The proper expectation to that person that's selling the home. Say, listen, just know if we get an FHA loan come through, if you decide to accept that offer, then there's going to be peeling paint that's on that wall that needs to be fixed and repaired. That them bedroom windows that don't have those quick release latches for the security bars, they're going to have to come down. So when you set the proper expectations up front to the seller, they feel more comfortable. They feel more
stress-free.
Right, stress-free.
Yep.
And then it puts you in an expert position as well, right? And then same thing for the buyer's agent. You just want to, have that top of mind, the same thing. So, okay, this is my buyer is approved for FHA loan. Okay, as I look what's going on with this particular house, and you know how to navigate from that. It's super important because why? The topic is today, 10 things home buyers and real estate agents must do to ensure an efficient and timely closing. I'm gonna give you an example, right? We had a property, a loan that came through to have a property underneath contract. And of course, from a lender standpoint, just so you guys know, the lender don't see the property, right? The lender have no clue what that property looks like, et cetera, right? The eyes and ears is the appraiser that we talked about earlier. So when the appraiser went out and the appraisal report came back, the report said that, hey, it has to have a reinspection because it didn't meet FHA guidelines. In this particular property, they had security bars on the bedroom windows, right? So now the buyer agent and the seller agent have to have that conversation, hey, how we move forward from here. And that determination needs to be made if the seller wants to take it off, or they might walk away from the deal, right? Hey, let's go find a conventional buyer, right? But my point of saying is that slowed down the process, because in this particular case, it was almost a week went by the time the bars was off the window, because now the appraiser has to go back out to the house and actually physically look at it, take photos, take notes, come back to the office and give us a report to the lender.
And guess what? They're not going out there for free.
Good point.
They're charging the buyer. So again, it's causing stress. So now the buyer is like, okay, wait, I have to give up more money. You know what I mean?
Right.
Then on top of that, you may have a possible closing delay.
Correct.
Because then that appraisal report has to go back to the underwriter. Then they have to approve it again. And then we go through the process again. So,
so to make things efficient, to make sure we close in timely, we just want to keep those things top of mind, because we don't want those delays. Like this particular one I'm thinking about, it had about a week delay in there, right? Now, Veronica mentioned that the buyer will have to pay for their reinspection, right? The reinspection might be, $165, $175, or a little bit more, depending on the property, the square feet, et cetera, right? But the seller can actually pay for that too. It can be negotiated. The seller don't have to, right? But it's a conversation worth having, because, hey, you had the bars on the house, right? I already paid for the appraisal. I think it's fair for you to pay for it. But again, that's negotiable. They don't have to do that. But that just helps us to be able to, from a lender standpoint, without losing a week worth of time, right?
Right.
The reason why, because typically what Veronica, not typically, what Veronica and I actually do, we don't order the appraisal until the home inspection report is actually okay with the seller and the buyer. And they're saying, hey, we in agreement to fix anything that need to be fixed. And then we order that appraisal, right? And so let's go to the next, let's go to,
well, that's actually the next one. So agents, you want to schedule your home inspections ASAP. So as soon as the buyer gets a contract, the first thing you should be doing within the next 2 or 3 days is schedule a home inspection.
Absolutely. So that's number 4, right? Schedule that home inspection as quick as possible. And that is including the home inspector themselves, maybe the plumber, the termite guy, right? Et cetera, et cetera. One particular case, I'm just thinking back, we had a contract came over across the desk and the inspection period is about 7 days out. So I told the realtor up front, I said, listen, just so you know, the home inspection 7 days out, we're not going to be able to order the appraisal until we get that report back. She's like, oh, okay, all right, I understand.
And one of the reasons we do that is because we like to sleep at night.
Right.
So I don't feel comfortable allowing somebody to pay for an appraisal and then they get the inspection report back and the seller don't want to, fix some things that they asked for that's very important to them. Then they're out of what, $550, $780, just depends on the property type, how much it costs. But I just don't feel comfortable taking people money.
Right, because they already paid for the home inspection, right? They paid for the termite, so they're already coming out of pocket. Now, by all means, if the buyer, the borrower was advocating about his, listen, we want the appraisal, order the appraisal range.
Then we're gonna do it.
Then we're gonna do it, right? But we just like to educate, obviously.
But what happens is, like Randy said, if you schedule an inspection period 7 days out, then that's a delay right there. Number one, that's a delay.
That's right. Because now we have 7 days, that's a 1 week, that's a delay. And all of a sudden we have a reinspection that need to be done because they had handrails on the porch that was super loose. And now there must be a reinspection. So that's another 7 days. So that's 2 weeks.
Actually 3 weeks, because after the 7 days, then you have to send over the inspection response. 72 hours on each side. So that's 3 weeks.
Good point. That's what I'm talking about. Good point. So yeah, so that slows down the process and that slows down the efficiency, right? So just keep that in mind. What's the next one, Veronica? Number 5.
So number 5 is obtain your homeowners, your flood, and your title fee quotes. Now, this is very important too, because a lot of the first thing a lot of buyers want to know is, hey, what's my estimated monthly payment?
Yes.
Well, as a lender, we're only guesstimating, meaning, hey, okay, this is a $300,000 home. Well, the home insurance probably about $2,500 or so. The property taxes, if it's in Orleans Parish or whatever parish, I go to my tax sheet, look at the sales price. So I'm doing all this extra work to try to figure out what your estimated payment could be. However, once you get a purchase agreement, if you immediately request your quotes and give it to us, we can give you a better idea of what your monthly payment is going to be.
Right, absolutely, because these are third-party people or parties, right? The insurance guy or the insurance lady, that's a third party. So we will need their quote. If it's in a flood zone, we'll need their flood quote. HOI, the homeowners insurance, will need that quote. And if you as the buyer, you're gonna be choosing your own title company, right? So we need the title company fee quote to know how much they're charging for the fees, right?
Because that's another question. How much I have to bring to closing? Well, that's included in your closing costs. So we need those fees to actually tell you how much you estimated, how much you're going to have to bring to closing.
That's right. And so once we have these fees as quickly and swiftly as possible, now we could get what we like to call a loan estimate out, or the industry might say LE, loan estimate. And in that loan estimate, now you're going to have the breakdown of your principal and interest, your escrows, which include your homeowner's insurance, flood insurance, and your taxes, right? If it's in a flood, if it's in a flood zone. So now you have this loan estimate that could go out quickly and the loan is being processed quickly. So you definitely want to make sure you have your quotes. And also I would throw in there, make sure you have good contact information, right? Emails and the name of the
Phone
person.
numbers and
Right.
things like that. Yep. It helps us.
Right.
Helps us help you.
Number
Number
6, right?
6 is review your inspection reports and finish negotiations timely. And you have to remember, which a lot of buyers kind of miss this, but in your contract, it says time is of an essence. So what that means is if you don't treat things as if it's priority and is of an essence, then you're actually breaking your agreement with the seller.
Right. Because at the end of the day, once that report come back, you don't want to what? Cause delays, right? You want to be efficient so you could close in a timely manner. So you don't want 3 days to go by before you look at the report because it's a Friday night and you went out and partied. You're not going to be sober until Monday morning, right? You want to try to avoid that as much as possible, right? So now you want to review that report because there might be some things on there that you're not comfortable with, right? The report might say there's a plumbing issue under the home and the home is a slab home, and that might be an issue for you, but you need to know that as quickly as possible so you could do your negotiations with the seller and or walk away from that property to find something else.
Which leads us into number 7. Tell the lender when negotiations are complete and request the appraisal.
Awesome, awesome. And so Veronica touched upon that a little while ago. Typically, what we do, we wait till you give us the green light and say, listen, we just finished the negotiation with the seller. The seller is willing to fix that plumbing issue. We're ready to move forward. Then boom, Veronica and I, we telling our team, look, get the appraisal order, let's move forward and off to the races that we are, right? And so in the midst of that, as we waiting, the file is being processed. We're reaching out to the employer, if you are a W-2 employee, confirming that you are working. We stacking a file with all the necessary document we need, but we just can't push that file to the next milestone because we don't have that appraisal yet. So that brings us to step number what?
Number 8. So everything, guys, everything is about mindset, everything. So number 8 is think from the place you want to be. Think about the end results.
Yeah, absolutely. And the reason why we threw this in there, because like Veronica said, everything is about mindset, right? If you are thinking from the place that you want to be, meaning that you have those keys in your hands and you visualizing yourself driving up to that home and you pulling in that driveway, you're digging in your pants pocket or your purse, you're getting your keys out, you turning that key, right? And now you walking in there door and your little children is greeting you at the door saying, mommy and daddy is home, right? You need to think about that end result. Think about, what type of equity could be built up in that home in the next 10 years or 15 years, right? Think about those things, right? Things that are good, things that are prosper, things that are, that are truthful. Think on those things, right? So now when you are in the mindset of thinking from the place you want to be, having the keys in your hand and being a homeowner, now when the tough times might come, when the challenges that you might think of might come, it keeps you motivated to keep moving forward and then to be responding within 24 hours with your loan documents, etc.
Yep. And number 9, be optimistic, patient. The way you perceive it is the way you'll feel and attract to you.
Right. So you being optimistic, saying, look, I know that this is going to work. This is going to happen, right? And everything, nothing is like a guarantee, right? But you have to know that the possibility is very, very strong if you've been pre-approved by your lender, right? So me and Veronica, we're very, very good at asking questions because every person loan is a customized loan for us, right? No financial situation is exactly the same. So when we ask questions, we get the details and we pay attention to the details, and then we be able to provide a financial strategy that makes sense to that person, right? And if they're in agreement, then now we have this plan in place that just following the book. Now, my mentor told me a long time ago, plan your work and work your plan. And that's where the success is going to come from. So being optimistic, saying, listen, I'm with those. I know I could get this home. Let me be optimistic. Let me be patient because I know there's a lot of moving parts in here. And that's why, again, you want to set the proper expectations and or have the proper mindset up front because there's a lot of variables in place. There's a lot of people touching these files. We talked about earlier about closers, funders, underwriters, loan processors. We talked about the appraiser. We talked about the home inspector. We have a ton of people that's working on your behalf as a buyer to help you to get in your home. And of course, each one of those persons have some personal problems they may be having, right? They might having some fun times at home, but they might have some not so fun times at home. So there's a lot of movement.
Not saying that they should bring that to work, but
of course not. We're not saying that. Do they? I'll let you guys answer that. But that brings us to our next point, and that's number 10, right?
Which is handle it with grace. Just know it's part of the process.
Absolutely. And so, you know, my mentor told me a long time ago, he said, Randy, until you handle it with grace, it will stay in your face. I'm gonna say that again. If you don't handle it with grace, it's going to stay in your face. So listen, just be patient, be calm. Like, listen, you're thinking from the place that is already done, right? You're acting as your prayers has already been answered, right? So be patient, you know, handle it with grace. And if the lender asks you for a document, you say, man, I sent that document 2 weeks ago. I get it. They might not see it in the email. Just give the document to them once again so you could keep that file moving, because you don't want no delays, right? And so, having said, anything you want to add to that last point before?
No, I think we covered it.
All right, good to go, good to go. So listen, guys, here's the next thing. I'm gonna give you the quote of the week, right? We have a session that we like to do called a quote of the week. And this quote today is by Earl Nightingale. And it reads, people with goals succeed because they know where they are going, right? I'm gonna repeat that. People with goals succeed because they know where they are going. So as a home buyer, your goal is to buy and purchase that home. If you're a seller, your goal is to sell that home, right? And so you want to keep that in mind, is that when you have that goal, you focus on it, you're thinking from the place that you want to be. And when those challenging times come, it just makes it a little bit more comfortable to grow, GROW, through those challenges.
That's right. So
in our next, what we want to talk about is kind of give you guys some information in regards to, you know, why we created the MortgageWISE radio show, right? Today was our topic of 10 things home buyers and real estate agents must do to ensure an efficient and timely closing. We talked about those 10 things. We just went over it. And so at the end of the day, guys, you want to put yourself in a winning environment. Teamwork is everything, right? Everybody can't work with each other. I get it, but teamwork is everything. How can we make adjustments, right? The plan is the plan. The goal is the goal. That's the goal. That's the target. That's what we all moving towards, to get this house sold, right? But now we can make adjustments along the way. So having said that, guys, I just want to let you guys know we have a no fee guarantee. It's a free consultation that we give. We don't charge for the consultation. We don't charge for an application. We don't charge for a credit report. You pay us nothing until you actually close and get those keys in your hand. And so, you know, my direct number, if you have questions, is 504-270-2783. You can reach me on Facebook or Instagram at Mr. Randy Chambliss. And also my website is randyknowsmortgages.com. Veronica?
And my contact information is 504-715-4388. Or you can reach me online at Instagram or Facebook, Veronica Chambliss. And also my website is VEE, Knows Mortgages.
Absolutely. And we closed out by saying, you know, we chose this topic today because on the last podcast last week, we asked people to send us some topics they was interested in. And we had a few people talked about this topic. So we thought it was a great topic. So I hope you guys enjoyed it, got some value to it. Again, on this one, if you have some topics that you would like to learn more about, you want us to discuss on our next podcast, a video podcast, let us know, right? And also, if you want to be one of our subject matter experts, make sure you reach out to me. You could inbox me, you could text me, call me, we can get you on. Stay tuned. We got some exciting experts that are going to be coming on the show pretty shortly. This is the MortgageWISE radio show and video podcast. And I am Randy Chambliss, and this is
Veronica Chambliss.
You guys have a beautiful, blessed day on purpose. Take care.